Hello everyone, today is February 22nd and this is second session of the Tape Reading Lab. Our first session was a big hit, big success. Thank you so much for all of your comments, either on YouTube or in your emails. It seems to me that, you guys like the context, so we're going to continue. And we're going to talk about, what exactly we're going to do today and then going forward. Hi, William. How are you doing today?
I'm very well, thank you, Roman. Yourself?
I'm good. So what did you think about the first session?
Very good, very enjoyable. I enjoyed the feedback and the very kind comments on YouTube. I'm glad that people extract value and enjoy our collaboration and our different perspectives. Yeah, it's very, very good. I'm looking forward to establishing a form of structure. But as you know, this will take a few sessions just to find our ground and just to see what our audience likes and to see what we like to do as well.
There were a lot of comments, by the way, William, on the doer. You and me. So people really like that conversation interaction. So, and I mean, I'm not gonna be hiding anything. I'm really enjoying our conversations with William. We had quite a few on the markets, and it seems like the time flies so fast when we talk.
It does.
Yeah, so
it does indeed.
The last session was really good. Well, with that, let's talk about the structure really quick. So we're still staying on the Monday schedule from 9 to 10:30. William, I kind of find it, so great just to dive into the market on Monday in the morning and then, have that perspective for the whole week. Your teachers, and then we were discussing the course. So for now, this is what we want to do. We want to do 125 from the next session, which is March 1st, to the June 1st. This is going to be a legacy rate at 125. We're not going to go lower than that. There is just too much material that we're given in each session. And for now, this is how it's going to be. And then 150 after June 1st. For the content, you kind of guys could see that we've covered overall market, to a certain degree, and then something specific. We were talking about the S&P last time. So today we're going to concentrate on oil, actually, although, the whole market is just so freakishly interesting. So maybe we'll stop there as well.
It is.
As we go through any type of the discussions, it's always a conversation. And again, I just want to reiterate, there are probably quite a few of you who are, beginners, or you just heard about tape chart reading and you're interested and you saw the first session and then you just kind of hooked. For that, if you need the basics, go to our website, wyckoffanalytics.com, and find on-demand tape reading course. This is where you start. When you come here, what we want to do is just to keep the conversation at the high level, to keep the conversation about different concepts, in-depth concepts, and then we could, of course, come back to basics just to quickly explain those. We've talked with William about doing some kind of simulation exercises, and some of you suggested that we go and do the live tape reading, which we will at certain sessions. I don't know if we'll do this today or not. And then we'll do, some simulations. We'll see if maybe today we'll have an example of that. And obviously questions. So last time we couldn't answer all of your questions that were coming in, just for two reasons. There were quite a few people with quite a few questions. And then some of the questions were kind of getting us away from the conversation that we were having. And we definitely don't want to do that. William, any other thoughts on this, on the structure so far?
No, I think we're building a good structure here. No, it's
well, perfect. We'll improve on this for sure.
Yeah, it's a work in progress, but I think it's we'll see what the market provides.
And by the way, guys, for those of you who's going to sign up for this series starting from next Monday, obviously, we're going to send you an invitation to all of you who attended or signed up, or you guys watched YouTube videos. Those are going to be 2 free videos. So if you feel like you want to be a part of this class each Monday, shoot us an email at wyckoff gmail.com, or you could find this information. We'll send it to you. All right. Well, William, why don't we start with just the general market? Because today we obviously had a very interesting day, and let me kind of give you maybe something to think about here, and to start. So I was looking at this decline right here, the first four, and last night I was like, I should tweet this. There is enough weakness to produce some kind of reaction, which is going to be more meaningful than what we've seen before here. Plus, I'm looking at this analog where there is a stop in action, then there are two bars where it's seemingly there is some demand, but there is just this consistency of selling, kind of like nagging selling. Sell, buy, sell, buy. And then this bar on Friday obviously just tells us that there is weakness and there is potentially more to come on the downside. And I was thinking about this scenario. Bar number one, bar number two, bar number three, bar number four, and bar number five. So 2, 3, 4, and now today 5. And it looks like it materialized kind of the same way. So could you talk to us and give us your perspective as at this type of spots, what kind of selling is this? It's almost like it's, again, selling and buying at the same time.
It is. But as you've rightly said over here, though, we have the sustained volume coming down. And as as we can see from here to here to here to here, this is definitely, a change of sentiment here, especially when we see this bar unfold as you did. This, as you rightly noted, these four bars, they did pave the way for this down bar. But using your comparative and relative analysis over here with these four bars, I see the selling, obviously, this is today's unfolding live, isn't it? Yeah. We can see that obviously the day hasn't finished yet, but the selling is more aggressive coming down here, as it was on the last bar here. What do you think of this action compared to here? What do you think is weakest or strongest?
Well,
here,
definitely today's action is weaker than the one that was in October. But at the same time, and let me quickly erase this and come back to the overall picture, just to give the perspective of this decline in NASDAQ. So we're looking at NASDAQ. Please, guys, look at the Dow, Russell, and S&P. So what are we seeing? We're seeing rotation unfolding right in front of our eyes, where still the growth and tech related growth is being sold, and it becomes a source of funding for what? For small caps, for that reopening recovery of the economy type of stocks. And when I look at my portfolio today, what behaves well? Anything that is related to the reopening of the economy. So they're still buying those stocks, but where do they get the money? They get the money from, the tech. Bitcoin had, and crypto world had just like a huge shakeout, overnight. And, there are some source of funding that potentially could go from there. So just wanted to keep this perspective because we were looking at, obviously, the weakest one. William, anything on that?
No, I think you've covered everything. Primarily I follow the S&Ps, and if you draw this little line across here,
let's increase that.
The market still has the right to come down and to test, this area, and test down. So I can't. The market. Sorry, here we go. Still has the right to come down here and test and remain bullish. So we just need to see how this unfolds. But what we do note is here, we don't get the best quality selling in the world. We don't get the big widespread down bars. We can see there's a struggle going on here. How do you feel about this reaction so far on the S&Ps?
Well, again, I'm looking this from the perspective of like the overall market. I think it's just easier for me to do that because again, this weakness here in NASDAQ suggests, raising of funds. So I would be saying, my assumption was that we're going to be above this level and we're going to consolidate for some time before moving up. So
Yep.
based on this assumption, the ones that are weaker are going to definitely go below that support. And we see this
That's
from
already
NASDAQ.
occurring on Nasdaq. Yeah.
Yeah. And then the ones that are stronger are going to hold and going to hold in a different manner. So, for like Russell, the Dow so far, I mean, like if we wouldn't see NASDAQ, we probably would be thinking that's what's unfolding. We're just like in this smaller trading range above the resistance that we overcame. And NASDAQ, again, weaker. I wouldn't be expecting NASDAQ to, let's say, go to this level. Probably stop in the vicinity of this bar because this is where on the way down there were quite a lot of buying. So if there was a lot of buying here, institutions have to check in again and to see if there is value for them at this point. So I still would be expecting more of a higher low, and for Nasdaq more of a defined higher high trading range rather than let's say for S&P or Russell or the Dow.
Yeah, it's
Well,
interesting market conditions at the moment. For sure.
Yeah. So would you like to come back to any of those markets, or should we jump to something else?
I don't think there's much to add. I think that shakeout on Bitcoin was huge.
Mm-hmm.
Very,
So
very, very.
how would you interpret this, William?
Well, I think it's just a move for another grind higher, another push on up. It's kind of the characteristics of Bitcoin to do this.
Yes. Mm-hmm. And we saw that multiple times. So for instance,
yes,
here.
It likes to do this before a move. We might consolidate a little. We might, we want to see how many bars it will take to eradicate the perceived weakness on here. It took 4 bars. Here it took 2 bars. Here it took a while, as we can see. However, the nature of this shakeout is very different as opposed to this one because we're coming towards oversold within a trend for a couple of weeks. Here we just bang, we slam straight down while we're at the highs. It's different contextually to this shakeout. So this will certainly trap more. I don't really think in those terms, trap more traders, but this will certainly have a more of a shaking out effect than this over here. And we can see that from the volume. This volume is very, very high, isn't it? Very high. The last time we had this volume was over here. So there's an awful lot of trading that's evolved in that bar. What are your thoughts on that bar, Roman?
Yeah, well, first of all, there are quite a few news in the crypto world today.
Yes.
Yeah, so Jelen Allen announcement, that's number one. Then the big whale, and the big whale is kind of like the CO type of traders. We're moving a lot of Bitcoins, like over 13,000, I believe, or 1,300, something very stupid in terms of the quantity. So that produced that big push down and push up. And there were some other news that maybe less meaningful, but still could have had this impact. Bitcoin moves like that, and crypto.
It does.
Usually they would have that type of, William, right? Shakeouts and then recovery. So
yeah, it's the closest to Forex, I think.
Yeah, and actually now that I trade cryptos, and I started like a week ago or so, I kind of it brings me back to my forex currency trading years ago, and indeed, it's almost the same type of quality of selling that you could see in the shakeouts as you could see in the fiat currencies, where an importer exporter comes and they just don't care about the price. They need the currency right now, so they're gonna dump or they're gonna buy, and that's it. That's the end of the story, and that produces a lot of this kind of like extreme movements up and down. Also, you could think about the government interventions when they come and they just do specific interventions in the market, and that could produce like 200 pips type of move. So we could see this same type of behavior in Bitcoin. When I look at these three bars, what's important is just to understand that contextually, they usually occur at the same place. So contextually, you're usually going to have, after the move up, this type of bar that's going to suggest a change of behavior, which is going to suggest a change of environment. So your assessment should go into the bar itself, like what kind of bar do we have? What kind of character of the bar? That would suggest first the bias in its by itself, and then potential structure or potential, what kind of strength of the structure we're going to have. So what do I mean by that? So for instance, William was talking about the recovery out of this bar. So right away, we could see that this recovery right here made a high, and this recovery right here made a lower high. At that time when this happened, we were commenting, because of that, we are expecting a lower low, and because of this higher high, we're expecting a higher low. So a very simple technique on understanding the character of how the structure might unfold. And then the bias, we obviously should start with the bias first. The bias obviously is all in the tail and in the volume spike. So the tail suggests some demand pushing the price up. So the volume suggests presence of the demand. And then the result shows that there is a capacity of the demand to actually move the price up. And that suggests a reaccumulation bias. So coming in back into this bar, again, just thinking about the same concepts, demand is present, demand is moving the price up. So reaccumulation to be confirmed or to fail. And this is a big issue for me, with students, because majority of them forget that you even if you establish the bias at the beginning of the trading range, a lot of things could happen along the development of this trading range. You got to always check for the confirmations or the failure. So I would be also, William, and please comment on this, I would be comparing this, let's say, to this in terms of the intensity. So this spread was much more, and also the volume diminished. So I'm kind of feeling that the selling was less here than it was here. So to me, as we go into this trading range, and I'm thinking that we are in the trading range right now, just because of that action, I would be thinking that selling is less, so the duration of the range is going to be less. What do you think about that?
Yes, I concur. And I also like where this bar tested perfectly right into this little congestion area, sitting on top of this bar here, which drove us into new highs. Makes sense. It's tested at the perfect place. What I like, well, I wouldn't say what I like about this shakeout, but it's very interesting because I think that the context of this with the high volume, we get some uncertainty at the highs, then we get a down bar and we get more down bar. It kind of induces sellers to sell, kind of little momentum traders on a 60-minute time frame, or 15-minute time, just the lower time frames in general. Here, I don't think there's a warning. It literally, it acts, and it is a shakeout. So contextually, although it doesn't have, the higher volume, I still think this has achieved a great deal by shaking out the market, if that makes sense. It kind of has, because here the sellers have a reason to sell because we can see that we're coming down, whereas here this pops out of nowhere, and I think that has a psychological effect on the market and the behavior of the sellers and the buyers.
William, this is such a great thought.
Yes. Oh, good. I was just going to read that to you.
And I have a follow-up question on that.
Okay.
Well, the follow-up question is, so we have kind of two different scenarios here that develop somewhat the same way, right? So it's all about the shakeouts, and then what potentially comes next after that. So we could potentially have either a trading range like we have here, and this is obviously a much more pronounced shakeout type of action on the change of behavior. And by the way, when we talk about the shakeout in phase A, right, for a lot of you might be confused about this because you would be thinking like, what are they talking about? Like a shakeout in phase A? Wouldn't we have like an automatic reaction, automatic rally in phase A or something like this? Well, we are talking about the character with which the price moves to the downside. And the character of that is the increase of the effort, which is substantial. It's a volume spike, plus also a quite substantial change of behavior. So the question becomes, are we going into a trading range after this type of shakeout type of behavior, or are we doing a quick recovery? And I like your idea, William, about the sentiment, that the sentiment plays some role in the faster recovery rather than in the trading range. Because in the trading range, when we saw that lower high as inability of the buyers to produce, a more push to the upside, that led to lower low and the increase of the duration. But here you're saying, and this is, hopefully I'm hearing this correctly, is that because of much quicker recovery and how close it is to the actual top here, the sentiment might not shift that fast. And that means that the recovery might be faster. Is that what you're saying?
That's what I'm gleaming from it. Yes. That's my interpretation of that bar. And specifically contextually, as I said, where it tests perfectly at the top of this bar into this congestion area. We bounce off, huge demand, shakes out. There is no, there's no impetus for sellers to sell. It shakes out. I would, odds favor a quicker recovery at scenario A here as to this scenario over here. Whether that unfolds or not, as you know, the market has its own ideas, but I would favor a quicker recovery of scenario A. Rather,
just for that thought, I would attend this session. Just for that single thought, the recovery out of the shakeout based on the sentiment. Because usually, it's a kind of multi-layered analysis right there. I love it, William. So let me ask you a more detailed question, and it actually kind of comes from the thought from Franz here. Franz is commenting on the demand that comes prior to the shakeout. So, talk to us about the difference in the demand signature and the subsequent shakeout after that. So, what could we expect in one situation and over another?
Well, here again, we might expect more of a reaction because it does indeed end climactic with this bar. And then we get the selling. Over here, I think this is kind of orderly buying. Buyers are in control. So as we covered last week, we don't need to see volume increase as price pushes higher. It would be nice to see volume increase as we break areas of structure like we do here. But if we just look here, so we push on up, we consolidate, we push on up, we push on up, when we push on up, we get good volume and we get weak volume to the downside. So contextually again, where this bar prints, it doesn't really signify to me a complete change of behavior. I think it has all the characteristics of a classic Wyckofian shakeout. Whereas over here, again, it's slightly different. So answering your question, yes, this, due to the nature of the volume and the ends climactic, I prefer this kind of drive into new highs than this here, and I'm sure that you would agree. And obviously, if we draw a channel, we would probably see that we are kind of overbought with the volume and the climactic kind of feel it has. It's very different to here because we're not overbought. So for all those reasons, I actually prefer this drive into new highs, especially as the backgrounds. It's not just this drive, these last few bars we're talking about. We're talking about the break. We have this trading range. We're building cores as usual. Then we push on up. The market has the right to retest here. It doesn't. We hold. And then we drive on through. Then we get the shakeout. Then boom, we should take off to the upside very quickly. But here, as you rightly suggested, after this kind of weak buying here, it does suggest that we will put in a new low, a lower low, and therefore form a trading range. I don't think this A here kind of suggests that kind of motion. Although, we can be wrong. All we can do is speculate and analyze the chart as it unfolds until we get more information.
Yeah. Again, I'm really liking this discussion about, how the sentiment influences the recovery of the shakeout. Let me give you another perspective here, another thought. So just looking at this rise right here, where there is so much buying. I mean, like
A lot
institutions
of
that,
buying.
yeah, the institutions are basically saying we gotta be in this space. That's it. We were not in that space in 2017 when the price was going up. Then everything declined, then COVID, and so on and so forth. Now recovery. We have to be there. So anything, like announcements like Elon Musk announcements, on these 2 bars, and him buying 1.5 billion in Bitcoin. This type of institutional interest. So to
Yes.
me, like looking at this latest demand on this rally, and the way how this change of behavior unfolded compared, let's say, to what we're seeing right here. And who knows, maybe we'll have another bar down here, so we'll have to like reassess at that
Yes.
point. But this type of selling that overcomes this type of buying is much more aggressive than what we're seeing here, because
Yes.
at this point on this second rally here, we do not have the same type of the demand. I mean, Elon is acting out right here, so he's a buy, but overall the volume signature is actually much lower than what we had before. So that suggests that institutions are going to buy when there is a lot of liquidity. So when the price kind of shaking out very easily because demand is much poorer, shakeout happens, and they're willingly coming in and they're starting to buy just because of the availability of the liquidity of the volume that is available to them at this point. So when that recovery happens fast, because there is not a lot of selling. So
Yeah.
it's kind of like an interest in this aggressive way against the aggressive buying, and then non-aggressive buying leads to less aggressive shakeout. William?
Yes. Yes. I completely concur. I mean, and this, like you said, I like your perspective there of the funds or whoever's buying down here, and that is a 20% drop from 60,000 more or less down to 48,000, and that's a significant move. So yeah, I like the way that you've I like your thoughts on that. That's good.
Ross is saying, a friend of mine, a colleague of ours, is saying each of the corrections was 38% of the preceding leg. And it seems like, yeah, Bitcoin is correcting like 30+% each time it has corrections. So for those of you who are long-term holders of Bitcoin, you got to be ready for this type of the corrections with the shakeout type of characteristics. It's always going to be there. So that's just the behavior of the market.
0.38, isn't that a Fibonacci level?
Yes.
Yes. Not that I am a Fib user, but
All right.
I'm aware of these things. But yeah,
sure.
very, very good chart. Very good chart.
Okay, well, William,
spot.
let's go to something else. And before we jump to oil and look at oil maybe in the more details, let me ask you a quick question about gold and silver. And silver is this one right here, so the bottom left, and then gold is the bottom right. So let's start with gold. How would you look at this whole structure here, and what are your thoughts on, the most recent action?
Well, I like the fact that we come down and we test down here. I think this is an interesting market of late. Obviously, we end climactic over here, and we're kind of still in the reaction, and there's still heavy selling, yet we're forming a base now. I haven't really been trading gold recently of late. What are your thoughts on this decline here from the climactic move over here?
I'm concurring that I'm looking at this as a trading range, like the one that you're drawing right here. To me, it seems like, and I was thinking a lot, and it just came to me just recently. So this was not like a very old statement or idea that I had about gold. I think this whole thing, this whole decline off the top to this bottom, is a much larger change of behavior that has the structure of like 1, 2, and 3, 1, 2, and 3, or A, B, and C. And that constitutes a much larger change of behavior that suggests a trading range environment that is starting to unfold. And we are still probably like phase B or something like this. We could potentially be in C. It could be like this double bottom type of formation. That's a possibility as well. I think that for the bullish scenario, you have to recover from here.
Yeah, this is the most important. That's the critical level on the chart for sure.
Yeah.
I mean, there's a lot of supply everywhere. Every decline here, there is, even here, there is definitely sellers are active. However, we are still trending higher. Look, can we draw? Does this fit? Yeah, we're sitting right on top of a lovely support area here, and this is the line in the sand, right? Right here. If we break here, we want to see at least a break of the highs here. I think it's quite, but I like what you said here about this being a long change of behavior.
Well, also, if we would look at like the latest reactions, these two reactions, what do we see? The first one, yes, supply emerges. What happens next? Supply goes down, so selling is less. We see this in the character. This was actually a really good call right at this bottom. Like, we are exhausted. Look at this volume signature, like going into that particular bar. Because sometimes when, and William, I'm sure that you've experienced the same thing. Sometimes when you make a call like this, and obviously this is not an everyday call, right? You have those periodically, but you don't have them every time. But sometimes you're going to be that accurate. And like on the last bar, you see that exhaustion, and then you expect a recovery. So we're seeing diminishing selling into that low. So that suggests that, okay, the rally is going to unfold. The rally is the best rally that we see so far. There is nothing else of that kind of the rally. Then again, selling slightly less off the top. And this is also very important. But with that slightly less off the top, we're closing slightly below. So it's almost like there is a slightly better bullish character, but slightly worse result. And then after that, William, I wonder what your thoughts on this. I kind of like the chirpiness of the reaction. There is a shortening of the thrust that shows us diminished momentum characteristics. And every time they try to break down, like this bar right here, so what does it have behind it? Not a lot. And then obviously, this is not breaking the level, but it has some supply. So it's a different character of the bar rather than a breakdown bar. And then the bar that follows it immediately does not have a follow through characteristically on the downside. So I'm liking today's bar. I mean, if it holds like this is a reversal. So another potential to go up. Like for instance, right here, did we truly reverse? We actually did not reverse the true range of this bar. Here, if we close like this today, that would be a reversal. That would be probably for the first time, even here, let's say 1/2 of the spread was not reversed. So weakness, 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 strength. So now I'm thinking, William, okay, well, maybe we're confined like in this trading range for some time.
Yes. I mean, if we go back to kind of, the channel basics about supply and demand and price interaction at levels, if we take this high here and we take this high, we take the lows, and we're meandering down. So when we come here to the demand line, where would we expect selling to emerge? Well, we'd expect selling to emerge up here, okay? And we do. Good selling emerges, but what happens from here? We hold in this congestion area, and then we kind of hold sideways. Now, we don't see great buying, but we can certainly see that buyers have halted any continuation or downside continuation from this bar. So from that same premise, we have from here to here. So when we approach the supply line where we expect selling to emerge, where's the logical place or next time we should find buyers? Well, it's down here, and we're not. We're holding, which again is a very subtlety, or I call a subtle sign of additional strength. You know, what does that say? Well, it tells us that buyers are, well, it either tells us two things. Either A, there's a lack of supply. I wouldn't say a lack of supply because there's kind of ease of movement coming down. So I would say that buyers are becoming more aggressive. And we can see that a little down here with the volume. But so taking into consideration your analysis, sorry, if you could clear the chart, please.
Yes.
So from here, the fact that we can't touch the demand line, and this is where we should find buying, and the fact that the notion that we do have this supply entering the market, but we're holding, and here there's no downside continuation. It is beginning to build just this segment from here. Out of all of this, after the change of behavior, as you said, this is the best buying on the chart, and it is indeed the best buying on the chart. So from here, in fact, the resolution after this good call you made was this little bar here from the exhaustive selling. This bar, which breaks above the highs of that exhaustive selling, this is kind of the pinnacle point on the whole chart where the change, the sentiment is different. We've got the change of behavior. We encounter selling here, that's fine. We get good selling. Where's the follow through? Now we're holding above here. And as we rightly said, the market has the right to test down here to find buyers. And the fact that we don't, I think, is a signal for a bullish environment. But as you said, this is the first level we need to see the market to overcome. And then up here, then we've got the trend channel. So it's very interesting in gold.
Yeah.
Add anything to your
yeah, well, you did, first of all, and thirdly, this is why I love these conversations with you, because it's
slightly different, but I see the bullish nature in a slightly different
but see, this is what it does to me. It produces me other thinking about this. So right away I'm like, okay, let's look at this from slightly different perspective. So in that way, somebody said complementary duo. It's just like one thought translates into another, and then into another, and it seems like we could probably just stay on this chart for a long time. How about this? So leg down, last leg down, last leg down, right? So look at the volume signature. There is buying there. There is no denying it. There is diminishing selling character from the top to the bottom, and then right here there is some demand that is coming in. So then, as we look into this structure, into this volume structure, it has its own trading range. It's a down sloping range right here. So lower lows, lower highs, and then the volume signature is very, very conventionally, kind of like diminishing supply into phase B. And then if this is a true phase C, then we want to see a slight increase of the supply signature over B, but overall decline from A to C, right? So the edges of the trading range will define demand presence by the stopping action and by the last capitulation by weak hands. But that signature is going to be slightly different, from A to C. And then the next thought is that, okay, well, if this is so laborious and like selling it is exhausted at this point, then if we hold this bar right here, if this is a true reversal, the first true reversal, since, let's say, this point right here, then we should produce the rally again back to these levels, 1940. If that would be the case, then, and again, this is the logic of projection, right? So one of the scenarios. So, William is drawing here the resistance levels that we have to overcome. But if we overcome, let's say, the first two, and we hit the third one at 1440 and maybe slightly high, like 1950, I'm sorry, then this could be a slightly higher high and act either as a minor sign of strength or maybe a sign of strength in itself. And then the whole picture is going to start changing. And I wonder what's going to happen to the overall market if gold is going to start behaving this way.
It's it's got I wouldn't say it has a tough job on its hands, but it does have three levels to work with here. to break through to get, to push up to the highs here, and also needs to break through here. It's got a big job. It would require a large amount of force, as in volume, to break through here. I don't see the market absorbing. Gold doesn't. I don't really see market tend to gold to kind of absorb in nature. Really, it just likes to grind its way through. If you follow what I'm saying, but
well, it's almost like it wants to always be bought into the
yes,
into the
yeah,
low, and then the volume signature diminishes and it kind of goes up by itself. Although, look at this spot right here, right? So there is definitely, but this is more
yeah,
speculative, so that the nature, the sentiment changes there.
yeah, yeah.
Okay, well, very interesting. Okay, well, I think also what's interesting with gold is actually silver, and this is ETF SLV. So this is a much more advanced structure because in gold we are somewhere here.
I think
You
it's
know,
bullish, more bullish, isn't it? Silver for sure.
definitely, yeah, and
Yeah,
it respects quite a lot of demand lines right here,
I like to see that.
comparatively
Yeah,
stronger than gold. Had already an attempt to upthrust with a lot of supply, so that the attempt to short squeeze
that
and
short squeeze. Yeah,
yeah. So I think that William, for silver, we are kind of in this range right here, just going up, still consolidating, and then later on, because there is no way that I'm thinking that the price will break up at this point with so much supply that came in at on the previous attempt and just continue going up. I would be expecting an attempt and then retest of the lows and then maybe like multiple attempts to go break it and then a true break. Would you?
and I think yeah. And I was just going to say, I think that's the beauty of our analysis is that we have these areas where we're looking to analyze. Like if we get to here, and I do think that we will test this. I mean, I don't. It's going to take a lot of, as in force or volume, or a lot of trading to break through, as you rightly said, the supply here. So what we do is we want to analyze the approach to this area, and then we want to analyze the reaction. How deep do we retrace? Like do we come back down to this area, or do we hold here, and then do we have another attempt? Do we have another attempt? Do we form a ascending triangle or whatever pattern you want, but a bullish kind of pattern? And I think that's, like I said, the beauty of our methodology is that we're always analyzing and comparing the previous drive. If we say this is the resistance level, we want to analyze the bars going up, the first reaction, then we analyze another drive up, and then the next reaction, and then we can gauge a clearer picture of exactly, by the force and the volume interpretation of what's occurring at this level, of whether it's going to break or it's going to
Well,
hold.
along the same lines, William, let me pose a question here for you.
Mm-hmm.
So, for instance, if we have this type of action where we are going into the triangle formation,
Yep.
and the whole responsibility of this formation, if we're still bullish on the buys, is going to be to observe whatever supply is going to
Yep.
be at the higher level. It's not at the lower level that we're absorbing the supply. At the
No.
lower level, we're absorbing the supply. But I wonder, how would you approach the differences in character and in not in structure but in character of the volume and, let's say, maybe like the price spread in this area, if this is a triangle, over this area, because it seems like structurally they might look the same if silver is going to kind of behave in the same price structural way, but would the character change?
Sorry, could you repeat that, Roman?
So would the
You
volume signature change? If let's say we have a triangle here,
Yep.
and we obviously have a triangle right here, structurally the same, contextually different. This is into the buy and climax. This
Climax.
is into potential sign of strength breakout type of thing. So as they look the same, how do we distinguish that the price is ready to continue to the upside instead of like stopping and actually reacting?
Oh, what do you mean? What do I want to see up here in terms of the
Yeah.
lack of
How
supply
what
in
would
this area?
Yeah, so how would it be different as a look, as a bullish look in an attempt to break out to you?
Well, I'd literally go back to the basics of the classic Wyckoffan absorption. I'd be looking for, although classic absorption is where we're looking at the reactions down to decline, but as you rightly said, right up here at the highs, I'll be looking for supply to diminish, and then I want to see literally the buying with high volume occurring at the lows, which is different to classic absorptions where you want to see the lifting lows with increasing volume towards the end. So I'm looking for the pattern, if you call it a pattern, if you will, to see. Sorry, did that answer your question? Now I think I'm. Yeah. Okay. Good. So you want me to compare this to this over here?
Yeah, kind of like,
Well,
if we're going to continue out of most recent structure, and it will remain bullish. I mean, obviously, we
yeah.
had a very similar look, back in August, September. So what's the difference there?
I mean, what I want to see over here as opposed to over here, because this starts with the buying climax. This doesn't. Again, the context is different. I think the importance is to see, or try to see, higher lows. You want to see buyers be aggressive. What I don't want to see is a churn up and down. Okay. Of course, it's entirely possible, but yeah, basically.
Interesting. I would probably want to, now that you're talking about, the churning and how it might unfold. For the more bullish scenario, I like how this upthrust, even though, like, yeah, there's a lot of supply here, so you got to take profits there. So some profits were taken there on that particular bar.
Yeah,
Just
sure.
because, supply is just too much, so the duration of absorption, might increase. And, for efficiency purposes, you have to take some profits there, with an idea that your long-term position is still intact and you're still there. You could actually have also, guys, some kind of hedge, short-term hedge solutions there, especially if you like use options. So you could use gold as a hedge, because gold is weaker, so positioned really well for that hedge trade and for sustainability of that equity line. Not to drop significantly if you're using any hedge characteristics. But for the bullish scenario, William, I'm thinking it would be nice to have a slightly higher next upthrust. And I don't necessarily would require to be significantly higher, but just like a hint that it could go a little bit higher than the previous one and then come back and then again and then come back. So that would show kind of like a developing bullish attempt to get out of this formation sooner, than, let's say, gold.
Yes, you want to see basically the very notion that you want to break these highs here is that there's impetus from the buyers to buy, and that shows that by breaking the highs of this huge bar. And then I understand I understand your question now for how you want to see the bullish structure unfold. So
It's my
yes.
language. It's my
No, it's fine. Yes.
Okay.
I completely concur.
Well, William, let's jump to the next subject, to the next topic. So on Friday, I believe, or something like this, I posted this tweet for you, and I said, William, do we have a potential change of character in crude? And I know how closely you follow crude.
Yes.
And you trade crude on a daily basis. So this is what I saw at that time. So maybe we could start there, and maybe we should switch the screen to you once we go into the chart.
Yes.
Okay, but just basically looking at the chart, like, because this kind of shows a frozen moment of history where we are right here. We don't know what's going to happen next. So my first question to you, William, about the crude is: would you be thinking in the same terms in terms of the analysis? Would you be thinking that this could be a potential stop in action at this point?
I mean, it has the potential to be a buying climax. However,
too much momentum.
Well, as you know how I like to analyze, I like to see buying climaxes really well. I think here we see supply emerge again where it should. We're overbought in the channel.
Yes.
And supply has emerged, and we do get good momentum. We do get, but there's nothing overt. I don't think, and believe me, crude does like to, crude does like to show, and does show extremities. So I'm not thinking in terms of a buying climax. I expect a reaction because we're overbought within the channel, and then our job is to analyze how much selling should occur. And look how much room, like, the market has the right to react to here and still remain bullish. I mean, that's a long way for the market to unfold. However, we've got this bar that breaks up. This is, if we hold here, the market is showing uber strength. So these are kind of my main levels, if it were.
Okay.
Do you have anything else you'd like to add onto that?
No, but I am very, very curious to hear your full analysis. So why don't we switch now to you?
Well, what it boils down to for me, can you see my chart here?
Hold on a second. Let me switch the screen. Okay, so you should press show my screen. Yeah, now I can see it.
Yes. So what you can see, how I like to decipher the background conditions is how I like to decipher where we are currently is from the background conditions, and where do we come from? What's the pivotal turning point on the chart? And of course, it would be this here, which is the selling climax. Before I go into my form of analysis, what do you think of this action here, Roman?
On that last bar?
Yeah, what unfolds kind of thereafter?
Well, I remember that day. Oh my gosh, that was something for ages to remember. When the short-term futures contracts were going negative.
Yep.
So that was, wow, something to see. I have never seen that before.
No, nor have I.
And I remember it was like $10, and then it was like $5, and it was like $2, and I'm like, okay, well, how low could it go? I mean, like, this is it, and obviously this is the near term contract, so it behaves in a different way. But this is such an interesting bar because it shows such an amazing aggression on both sides. There is an aggression of the capitulation by sellers, where they just basically, well, I can't do anything here, so I'm just giving up,
Yeah.
And then an immense aggression by buyers as well, and you kind of see a lot of buying on that bar. But because selling was significant, you need some kind of test. You also realize that you're in the extreme oversold condition. So most likely the recovery after the test of that bar. And I thought that was a really good trade. Unfortunately, my trading in oil on the way down was not the greatest. So I think that, emotionally, mentally, I was more of an observer of that market at that point of time. But that presented such a unique opportunity. And I know that you had such an amazing trade on the way down. So I just want to acknowledge that.
Oh yeah, thanks. Yeah, that was well, that was
Was that the best trade of your career?
That was a very good trade. Yes. Again, it wasn't. Well, I would say there was a lot of luck involved. I didn't know the market would drop like that, but the
well, you know
conditions
what I
right.
say about that.
Yeah, well,
people ask about the results of 2020. Now that we are done with 2020, and they're like, "Oh, wow, this is a really good result." And I tell them, "Well, you have to contextualize the results because." A lot of people made money in 2020 despite of COVID-19 reaction. Why did they make money? Or why did we make money? And why did we make good money? Because my answer to this is because we were good and we were lucky at the same time. And I think luck, in terms of the way of how market recovered so fast with a lot of momentum, it plays a big role on the P&L and then it goes into the heads and kind of like changes the perspective, the valuation of, let's say, a student or a trader of the level that they're on. And I think it's very misleading. So for those of you who are thinking now about this, and it kind of, triggers some thought in your head, think about this much deeper, because I would say that 2020 is an outlier in terms of the returns. So it's not reflective of your true level, and you should be ever more on the lookout of any type of hidden tricks and traps that the market has in store for you guys. So I would be very, very cautionary, and still would be practicing a lot and acting as if nothing has happened in 2020, because a lot of people come to me, William, and I'm sure your students as well, and they're like,
Yep.
oh, I'm good. Like, that's it. I've made so much money. I'm like doing like 6 figures, 7 figures. I'm planning to do 1 billion in 2021. Wrong. Very much wrong. Because you are being misled by your own ego and shadow, and you should come out of that with the full awareness. And well, that was the side note, William. But I know that
No,
you
I
think that
think
too.
you're very, very wise words being spoken there. It's easy. It's very easy, 2020 and the environment, to provide the ego.
Mm-hmm. With validation, justification.
Yeah. You think you're invincible, and the market is not a kind place. It can be very, very well. It is a very tough place. But all being said and done, the market moves on. Conditions will change. And I say, long live the volatility. I love the volatility.
I would love volatility to remain, but that's
Yep.
not going to be the case. We
No,
are
it's not.
diminishing volatility as the markets recover. So usually people would be thinking of lowering volatility or diminishing volatility throughout like consolidation price action. That's not true as well. There are quite a few variations on lowering volatility that you could find in the history of the market. And some of them you will see lowering of the volatility on the way up. One of the examples would be a rally on the diminished demand characteristics, which diminishes the volatility itself. But I think we are
Yes,
going
it
on
does.
those
Yeah.
different subjects. William, what do you see in that bar, in that big
Well,
capitulation bar, and then going forward?
well, if we speak about the the lack of demand like we did last week, and as you just said here, like we can see as we react down here, volume increases dramatically, and this is the rally thereafter. If we think comparatively, we are rallying with very low volume, aren't we? As opposed to the way down, and that's just like you said, the nature of the current conditions. But anyway, so what I see here, and I'm going to go into a trade today that's set up here on the daily time frame, which is nice. So what I see here, when I talk about the background conditions, obviously we have this downtrend channel, and it's been well respected, and we become, it tries to, it weakens here. We rally, bang, we slash right down. We become way, way oversold here within the macro channel, and we become also oversold here. That ends in the selling climax. Now, it's the recovery and what happens thereafter, which is very interesting. First of all, we eradicate this selling climax very, very quickly on this bar. Okay, and we come to this area, we can draw a level here. We're unable to react to even come back down to test. And as we rally through, volume increases. Then we push on up, bear with me. Then we push on up to here, and we encounter, we build a trading range. Now, what's interesting, we can draw a level from the resistance, from the gap area, always, as you know, Roman, areas of interest for traders. And then we come here. Now, don't forget, we become way, way, way oversold. We get the selling climax and we rally, and we get a good rally here. But what happens here is very interesting. What do you see here, Roman? This is a resistance level, and we try to react, and look at the volume. There is actually no volume. And if we think of that thought process of the lack of volume here, with the selling climax, and then look how we rally with increasing volume, we're in a very bullish environment. I'm thinking, okay, the buyers are active. Where's the next logical place to find selling? Because that's how the markets operate. between supports of level and resistance. And as we come here to resistance, look, we hold for near on a month, 3 weeks, just move my channel, for 3 weeks, unable to react from resistance. Okay, the market finally does react here. That ends, okay, you can draw a micro channel, that ends in a selling climax. Note the volume on this down bar. Unable to test the support. Again, additional strength. We come up, we revisit this area, then we come back down, we spring this support level. Again, this is a very, if you think contextually about this spring, yes, we do break into new highs, but again, if we look at the retracement from here to here, from the low to the high, from the rally, this is a very kind of, what would you say that is? 20%, 25% of the reaction? And Wyckoff says, you know, the market has the right to react 50% and still remain bullish. So the very fact that we only react 20, 25%, in my mind's eye, that's additional strength. And then from the spring, look what happens. We come to this, we come to the resistance, the gap area. We break on through, acts as support. We spring, we test this level here. Look what happens. We react, and then we just hold. There again, an inability to react from resistance, a supply area. Then boom, we get this upthrust kind of action here on this bar. Yet the very next bar, it's reversed on even higher volume. So what is that saying? Well, we're kind of discounting any kind of supply at this area, and it's just showing uber strength. Now, we rally. Now, like I said, what should happen? This is a good downtrend that has lasted, how long has this lasted? Well over a year. Let me just, so a year and a half or something like that, a year and quarter. So as we come up to this area here, again, if we use the logical, what should happen at the supply line, where we should encounter supply, and what that happens, we absorb our way through there. Again, additional strength. And look how we break through. Look at these two bars. Boom. We get ease of movement. There's no real volume, but you don't need volume because we've been bullish since the selling climax and all the interaction and structure and all these, you know, how this spring is breaking us into new highs. And it's by analyzing all of these structural areas of where supply should emerge and the inability to react that creates a very bullish scenario for me. Now, as we push on up here, this was your area on the charts where we encountered supply, and you said change of behavior. And I wouldn't really expect a change of behavior here because the market has the right to react down here and test the demand line to remain strong, remain bullish. So supply does emerge here and we react. And yesterday was this bar here. So what do you see here on this bar here, Roman?
Okay, so yeah, if we correspond the ball, yeah. So some demand is coming in,
Yep.
and they're picking up, some short-term value.
Yeah, I mean, I see what I see here. Like what I see here is just effort versus result at this support level, because we get a good break over these highs, then we push on up, we encounter supply, and immediately the supply is met with buying, a bullish effort versus result at support. So coming in to today's session, I have a bullish mindset. So this is very interesting that here on the 5-minute chart, this was yesterday or the day before yesterday. So we come down, you can see price increase to the downside that ends here with some form of selling climax. We're oversold here, and then we rally here where we have our change of behavior. Then we come back down and we find buying here, we test, we test, we test. So we know we're holding a high low here and we form a trading range. You know, the price is unable to test the lows here. So coming into today's session, you know, we have a trading range where we're bullish cause that ends with an oversold position. And within the trading range, what did I note today? Well, that we hold here a high level of support. We're not testing down here, and we could look at all this wonderful information. We, you know, support. Look at this buying come here, and at this reaction here, it reacts kind of into the top third of this kind of supposed demand, and this is demand. This is when you have this high volume bars with a big wide spread, you always have to disconfirm or confirm supply. Although we get good buying at support, we still need to confirm that, because this is wacky action for this time. But the fact that we continue north and then we react we don't react that deep into it, about 20-25%, and then we rally. You know, we start to push it. Look at the price action here. It's very, very telling. We push, bear with me. We push on up with good spreads, volume increasing, we react, inability to react, volume decreasing, etc. We react, shallow, we react, shallow reaction. Now, today is where we're coming to a trade that this here, Roman, is where we break through the resistance levels from this trading range. And we can see good buying coming to the market here. You know, we break through, and then this bar, as we dip down to reverse and close firm, is showing strength. It's a valid break. So you can buy this bar with confidence, okay? However, if you wanted to wait for confirmation, what I thought was a really good entry, or not an additional play, because this was quite aggressive, Roman, from my standpoint, to take a play.
You know what I'm going to say to that?
Go on then, tell me what you see here, Roman.
Well, yeah, I mean, in the whole structure, if you just condense the chart a little bit,
yeah,
like in the whole structure, I like the whole, you know, analysis here in terms of what to expect. For some reason, I don't have the pen. Oh, maybe when you know, as we switch. Okay. Yeah. So there is some vertical absorption around 60-20 in today's session relative to the previous highs. So, and I think that's what you've mentioned there. And obviously the whole background, I'm not going to go through this. William done such a great job. But we're coming in very bullish. So yeah, I would be buying on the vertical absorption at the resistance. So I'm kind of contemplating deeply about that spot lately, William, because what does vertical absorption at that higher level suggest? It suggests higher prices. That's number one. Secondly, it suggests if absorption happens, then the movement of the price might happen almost instantly. I mean, there might be like some kind of short-term testing of that, but it's not going to stay in a prolonged trading range, because if it would stay in the prolonged trading range, then the selling temporarily would win and the change of behavior would occur for the trading range environment to unfold. So vertical absorption suggests like, I'm going to absorb right now and the price is going to go high after that. So I think this is a really good thought to give to our listeners and watchers, that you could buy vertical absorption almost instantly.
Yes. What I like about this buy is obviously we dip down. I do think this is aggressive. Why do I say this is aggressive? Well, although we can read momentum, we can just read the background is just of strength as we've just gone through. But it's a notion that we don't break up and then come back down. We don't have a lot of time to think about it, which I think for most newcomers amongst us, we'd like to see a little bit of momentum, then come back down and disconfirm supply, etc., and then enter. But here, this bar is just telling you it's primed. We're primed to go higher, as you rightly said. But the market is kind, very kind, because a few bars later, as we come back to test, look.
Those two bars with low volume signature, William. I'm sorry to interrupt, to cut in.
No,
I think those are your point of interest, if I interpret this correctly. Yeah.
That is. This bar was the entry here. Now, if you can read the chart, you can enter on the close. Alternatively, you can let the market pull you in as you break the highs. Now, a question for those people who follow me closely and my work closely will understand, like, oh, how can you buy so close to being overbought in the channel? Well, it's to understand the structure, and you got to be logical. What do you think the market holds more value? Where we come from the trading range, and we've just broken out and we're testing kind of like the back up to the edge of the creek, or this channel. Well, I think the market will have more value within the trading range because it's building the cause and, you know, for obvious reasons. But the market does encounter some resistance here, and then we break on through. And now, obviously, just being a day trader, let's have a look. I think, and there we go. Your line in the sand, if you're holding contracts, will be under this low. Okay, but we are within a trading range here, and there are still a few contracts being held actually. But it's good to see this holding. But the whole premise of this was to understand that today's play was set up from the daily chart and understanding the bullish nature of this being effort versus result with the high volume at this level of support. Okay, and therefore I was expecting an up move. And then if you look to the lower time frames here on the 5-minute time frame, again here you can see from the background of where we had the oversold position, we're forming a trading range, and then we get a valid break. It's suggesting it's a bullish environment. So you got a bullish environment on the lower time frame and a bullish environment on the higher time frame. So I was just looking to take, you know, a piece of the market, if you will.
Well, this is a good trade. I like it.
Yeah, it was, yeah, it's okay. 36. I did cover some on this bar here, but yeah, I mean there are still contracts left in play, but this is not. The line in the sand for the remaining contracts is under here. It's not looking good. But any other questions here, Roman?
Well, I don't have particular questions on the intraday here, but maybe on the daily. So what are your expectations for the crude as, you know, we're continuing this rally?
Well, I mean, we have this huge selling zone to overcome, and that will take force for sure. We will take a lot of volume to break through.
Well, let me ask you this question then. I mean, obviously, every time we talk, we try to challenge each other to understand the case better, chart better.
Yeah.
So you're saying that it will require some force. So what kind of force, what kind of shape of that force would you foresee? Or at least, you know, we don't have to go into the predictive mode, which sometimes I think is such a bad idea. And I think a lot of people fail there, you know, because they're trying to predict. I would say that what we are trying to do is outline the scenarios of possibility, how the price structure might develop, what possible character might come. And then under those scenarios, identify the ones that will look the most bullish and then would look like failures, the most bearish. And then whatever comes, you take that. I think for the mental trading, it's a much better approach than like, you know, like, oh, my methodology is just like predicting that this is going to happen. So from that perspective, the question is, how, if we were to go through 65, how would we go in the most bullish manner? What would you see?
Well, the most bullish manner would just be just to break on through with a big wide spread.
With the huge volume signature, right?
I don't see that happening. I think there's too much trading at this level. There's too much trading at this level. And look at the volume in these areas. I don't see a big widespread. Possible absorption scenario. But what I want to see, I mean, I'm expecting supply to emerge in this area. But don't forget, I'm an intraday trader, and we've got a long way, primarily an intraday trader. We've got a long way to get to there from an intraday perspective, but we will get there. very, very shortly. And don't, why do I say we won't make it in one foul swift? It's because of the structure. We got this level here from the last swing high that put us into new lows. That's an area of significance. We've got the selling zone, the red area here, that's of significance. And if we do try to break on through, we got this channel that has lasted a few months. So there's going to be active sellers in this area, and they will sell. It would amaze me to see if we broke through this on the first attempt. I do not see a breakthrough here on the first attempt. What are your thoughts on that, Roman?
Yeah, well, I want to draw this, but for some reason I can't use the.
Okay, take over your chart. That's fine.
Okay, and we're close. William, you know that we're almost at the end of the session. We have like 12 minutes left. So.
Oh. Wow.
Yeah, that went fast again. All right, so let's come back to oil. So I would agree, and my tweet to you was more kind of rhetorical in the sense of we wanted to engage people to come to the session.
Yeah.
So yeah, let's definitely we'll do this again. I would agree with William on multiple kind of like layers of the analysis here as to 65 is extremely important level. So let me just show you where it is. So it's somewhere here. And so the expectation of the emergence of the supply of selling. Has the selling come? It started coming. Even on this bar right here, you already seen an attempt to go to the overbought condition, and somebody's selling, somebody's taking profits, and those are usually profit takers. Those are not necessarily like, okay, that's it, I'm going to distribute the whole thing. Energy is very, very hot right now, and oil is a driving technical force behind, energy in terms of like how companies are becoming more profitable, their revenue stream becoming more profitable just because of the oil price advancement. So with this type of, like, if we look at the technical picture, a lot of momentum, the reactions in the up channel and very muted. They're
very muted.
Practically, all flat. So this suggests still a lot of interest, a lot of buying. So first of all, the first thought is the long-term bias is still up. And then because of this 65, we might have some kind of short-term trading range. So how would the short-term trading range be created based on the momentum signature and the character of how the price moves in the uptrend? How would that be? Well, first of all, there should be a conclusion, so a stop in action itself. How would that be? Well, they need to provide more supply to stop that type of momentum train that oil is in right now, right? So I would be expecting first stop in action, another upthrust, second stop in action, another reaction, third stop in action, going to 65, and kind of creating a smaller distributional pattern. And this pattern will be the cause for a change of behavior reaction. So meaning that from here, from 65, where we are maybe in a much clearer overbought, overthrown condition, then we're going down in a much more meaningful reaction. But then again, relative to the whole rally that we have had, this reaction is not going to be that meaningful. This change of behavior will suggest the trading range with the reaccumulation bias, and we're just going to accumulate around this long-term resistance, or reaccumulate rather, around this long-term resistance, and we're just going to do this. This is a very natural way of the price to overcome a significant all-time high, because the bullish bias should act as if this is like a major sign of strength push over the long-term resistance. And yet the trading range is going to act as the kind of like a long-term backup action. And once that supply that came in here is observed, then we could have a continuation to the upside. But in terms of how we go into this formation, I think because of the nature of the character of the current move, we're probably going to have multiple attempts to still go up, in the upthrust type of manner, so upslope in trading range. Still flat in terms of condensed flatness, of that distributional smaller range. And then at some point, the selling will kind of like temporarily overcome the demand, and that will produce synchronicity to the downside with the actual result, and that will go into the change of behavior and later on into a trading range. So just kind of like some possibility of that type of scenario, William, that I had in my head.
Yeah, very good. But I think what I like to see, well, what is of importance, as you've noted, is it's just this rally, from here, is just extremely bullish. Like you said, the muted reactions, they are eager buying, and it's going to be interesting to see how they approach 65. But if you think in terms of a seller, because as you know, there are bears out there who only like to short. Every time they try to short, they're not getting anywhere really. So once they get to that selling area, which in a sense is a triple confluence area, be three sets of eyes on the supply zone and the resistance and the overbought condition of the trend channel, they might exert themselves a little, as in, okay, we'll have a big push. So we could see one big down bar and then perhaps a lack of follow through, and then we could trade, up or down and hold high lows, etc., and try and absorb our way through, because it's going to be the first time that the bears have had to kind of stretch their legs, because they're not really getting to on this rally. And this is we've been rallying quite a while here with a very, as you said, muted reactions. But on the same note, the same token, the buys are relentless, especially here, very muted. And here, look at this bar, how we've just, eradicated any potential signs of weakness from the reaction. Don't forget the market has the right to test down here to find buyers, yet they've come in very early, which shows the aggressive nature. So this could be the beginning of the climactic run, potentially, because if we push on up here, we push on up through the supply line, then we push on up to 65 on, say, 3 or 4 bars, and volume increases, that could be our move that produces this kind of trading range environment to absorb our way through perhaps 65. Again, that's another potential scenario that could unfold.
Yeah, I like this whole idea that we are maybe like in the preliminary supply. So preliminary supply is always about two things. It's all about emergence of supply. So some selling comes, profit taken or distribution, and then price will still go above this level. So the price will fail to stop here. So those are the two requirements, from the preliminary supply. And I really like this idea of a change of behavior that William talks about. I didn't go into the details of that, of how the change of behavior reaction might potentially look. And I think there is a lot of logic here that William is bringing to us, is that we might have a change of behavior like in Bitcoin, where we have a big bar with the big tail, which is the demand tail, and that still shows that demand is very much present, the buyers are very much present, and then we just kind of like recover and test in here in this manner. I wonder if that could be the case.
Yeah, it's it can act like that, crude, for sure. It's going to be interesting to see for the first time in crude for a while that we've actually got a real genuine level to work with. It'll be interesting to see how we interact.
Well, let me ask you another question here on crude. So what are your current strategies in crude? I mean, considering the character of how the market moves and how the tape shows this movement, are you more on the lower timeframes or on the higher timeframes?
Oh, well, I just showed you. I look at I do a multi time frame analysis for crude, and like I showed you today, I had a bullish nature. I don't swing trade crude. It's not to say I don't hold positions overnight, but I'm always just looking to decipher the demand supply and balance for that day. I don't try to, as you say, predict too much. I trade.
I would be surprised if you do. I'm seriously, like if you would, I probably would just, probably would conclude that something's going on there, William, if you're trying to
Yeah.
predict. It's a futile,
Yeah.
thing to
I,
predict the market.
yeah. I just accept the market and I trade what the market is displaying. And, the background conditions are of strength, and this rally out of this trading range here is very, very strong with muted responses, as you rightly noted. So,
well, as we have maybe like a couple of minutes left, and I think that oil will conclude today's session as a discussion. So, when you say that you intraday trading,
yes.
I would be thinking with oil, and this is just my sentiment, and I guess this is my trading mentality as well. When I look at the market like this, I'm itching to swing trade it. Why? Because I recognize that on the intraday level, there are quite a few opportunities as the market moves, so the spread expands. So for the intraday traders, the expansion of the volatility and the expansion of the price spread is of utmost importance. But then
Yes.
when we have such a momentum, it seems to me like the strategies where you have the trades over a week period in duration, when the price actually in the upswing, of utmost, profitability. And then for any type of short-term duration of the reaction, then you could have your intraday strategies as the counter to a more overall strategy. That seems to be like would be like a very efficient strategy. What are your thoughts on that?
Yep. I mean, I completely concur, and I do swing trade. I don't swing trade crude because it is my favorite day trading vehicle. But for example, I mean, here with the trading range ending here, we fall out of bed and then we come down, test and lower volume, then we spring here. I mean, there you go. That's this here, because we're building cores. Contextually, this would be a good swing trade. Alternatively, as we break through these highs here, your stop is wider. But it all depends on the context of what we come from. As you know, from my swing trading, I prefer to trade from trading ranges purely for the fact that we're building cores. Here in an up move, you can trade the momentum and the weak, which is basically momentum trading. It's slightly different to breakout trading because you don't know how much of momentum is left in the stock. Here we have, or whatever you're trading here, we have all the cores. So I've built my strategies literally for the swing trading around the trading range, just for the very notion of the fact that we have cores. That's not to say I don't take momentum trades, but it's just how I've evolved personally as for my trading. But I know that you prefer the swing trading aspect.
Well, it's just a matter of the time availability for me. So I do intraday trading much less than swing trading or long-term campaign trading. It's just because there is a lot going on. So
Yes.
I'm still trying to figure out how you intraday trade almost each day with the business that you run. So some challenges there in terms of time availability.
Yes.
But then you are in a favorable time zone where you live. So I really like your time zone over mine. Just because of how we're positioned in the world. Yeah. Okay, William, I kept getting this question from Gerard, and I keep ignoring this just because it's irrelevant to our discussion, but Gerard is very persistent, and I like persistency from students. So the question is, what broker does William uses? And this is completely out of the context of this discussion, but I want to award the persistency.
It's no surprise that I use for spread betting for the UK. I use IG, but my main broker is Interactive Brokers.
Okay, Howard Air is a broker, by the way. I had them multiple times.
Yeah, very good.
Yeah, okay.
Nothing to complain about. I've had no problems with slippage. Yeah.
All right. Well, guys, that's it for today. So this is what's going to happen next. We're going to send you an email with the invitation to join our paid session. So starting from next Monday, these sessions are going to be paid. As you could see, this is a very interesting format that we have. Again, the value of this class is not necessarily anything else that we would have in the regular class, where there is such a huge number of questions answer type of situations. This is more about the discussion where William and I are trying to get our thoughts to a much higher level of analysis and kind of stay there and habituate in that mental space. Why? Because there is a lot of truth that comes out in the observations out of those spots. And this is the whole idea. And I think that, for the second session, I kind of feel that we achieved that. It's not always that we're there, but still. So different type of class, different type of discussion that we would usually have. So it's very, very exciting. And we hope that you guys join us. And we haven't shown some other things, but we were thinking that we'll do some tape reading exercises where William and myself, we put on the chart and, we just go bar by bar. I think those are of great interest. We'll definitely entertain more of your questions once we're in the paid subscription. William, what else? What other thoughts do you have for our students or potential students, for other sessions that are ahead of us?
Well, yes, I think the content will continue to evolve and it will vary from market to market, and we will have a lot of exercises that I'm looking forward to. Sometimes Roman will provide me with some exercises, and we'll do some live tape reading, or we can do alternate bar reading. And we can also do it in a live environment. Perhaps that's something we could talk about, Roman, because within the live environment, the reason why we don't tape read live is because the 5 to 6:30 a.m. The 5 to 6:30 slot, that's my time, is the lunch period, and it will be flat. However, we can monitor this, and we can perhaps look at potential trading opportunities that may evolve. But from a teaching perspective, the tape reading live during the lunch period will be, I won't say it'll be futile, but there won't be a great deal going on. And we can teach more effectively by looking at kind of,
well, I would agree with
hindsight,
you. Yeah, I would agree with you. That there is more learning that is done on the historical charts than on the live chart. And I think that the emotional tendency is like, okay, well, show us the live chart, which we will. I mean, like,
which we will do. Yes.
Yeah, we could go to a lower time frame. I mean, we could go to 1. We could go even to a tick and kind of like even like show the ways of how you analyze and act, and maybe have some scalp trades.
Well, why don't we push ourselves out of our comfort zone and do it on a 30-second time frame?
I love that. I always love when we push ourselves. But
that's something I haven't done for many years. So,
just to conclude that thought, guys, there is a lot of advice that we give during these sessions, and this is just based on our experiences, and this is just based on our desire to help you out, because both of us are teachers, and we're true teachers, meaning that we really, really would like our students to succeed for multiple reasons. But this advice about live tape reading against versus simulated, you have to step away from the market to gain a better perspective of what the market does. And the only way that you could do this with the less emotional involvement is when you're away from the market and not when you're in the market. So you could definitely exercise, and we both advise our students on both sides to do live tape reading as an exercise for sure if you have time. But I would say that I would be advising more of the simulation outside of the market. When you are not emotionally influenced and your logic is much purer, and you have more clarity.
Yeah, that's a very important topic. There is the mental clarity you have of reviewing a historical chart. Things will jump out with a lot more clarity than they will do in the live environment, for sure. Perhaps not for Roman and myself, but if you're new to trading, or at least at an intermediate level, you'll still have that burden or the pressure of reading in the live environment. But I think that comes again with experience. Is like Roman and I, we don't react to the market. If for example we break through resistance level and we get good wide spreads with increasing volume, and it's a valid breakout, and then we get a down bar with kind of good volume, this suggests a reaction. And then in our mind's eye, we're already thinking, okay, we want to see the nature of this reaction. If volume declines and the spreads bar decline, we're going to buy. Okay, so we're not just looking at one bar unfold. We're always one step ahead of the game, not predicting, but we're thinking potentially what do we want to happen from the market. So I guess that is something we can do. So I've went completely off tangent there.
That's perfect. I love that. Yeah, and what a great point.
But you know, so it's not when we're tape reading live again. You would extract more from a learning perspective from us doing historical charts, but we will do some live tape reading because I think it'll be fun.
Absolutely.
Especially if we push ourselves and use a very small time frame.
Yes. All right. Well, with that, I think, William, this is where we should stop for today. A little bit over our hour and a half. It's been a lot of fun for these 2 sessions. I'm looking forward to the next chapter for this particular product. I think that a lot of you already expressed the desire to sign up. So we're going to send you the invitation. So please do so before next Monday. So that we wouldn't scramble on Monday, before the session. And we're looking forward to that. And William, I'm just enjoying, conversing with you about this topic.
Yes, it's been great fun, and I'm looking to the evolution of this tape reading lab, because there's going to be, I think, each session, although we will cover different markets, they will be varied. They really will be varied, and we could spend. There's a lot of in-depth conversations ahead of us regarding price action and
exciting, very exciting.
Yeah, it is very exciting.
Looking forward to that. And guys, thank you so much for being here, and thank you so much for commenting. Asking some questions. We obviously did not have a chance, to do all of those. But once we settle in, into next sessions, we will definitely attend to your inquiries more. All right. With that, William, thank you so much, and I'll talk to you next
Yes, thank you,
Monday.
everybody, and take care, Roman.
Thank you. Bye-bye.
Thank you. Goodbye now.